In this presentation, we will continue on with our comprehensive partnership problem, this time working on our financial statements, more specifically on the balance sheet, more specifically on the asset portion of the balance sheet. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Before we get into the numbers, let's take a look at where we are at. We are currently in the Financial Statements tab. We had been before in the Adjusting Entries tab. So let's recap our process real quick to see what numbers we're working with. Note we're going to have here the adjusted trial balance. That's going to be the tool we use to make the financial statements. How did we get that? We started with the Journal Entries tab. I'm going to click on the Journal Entries tab. We entered all of our normal journal entries in the general journal, creating the general ledger and the trial balance. Notice it just says trial balance. They're all just really trial balance. It's the names of unadjusted, adjusted, post-closing, whatever. They're all just names of a trial balance, really indicating what the time period is that the trial balance is generated. We then took this information and went to the Adjusting Entries tab, and we started it. Now we called it the unadjusted trial balance, because it's the trial balance in the point of time before we did these adjusting timing entries. Then we did these adjusting timing entries to make the financial statements as close to an accrual process as possible. So now this is really the end result. These are the numbers we think are most correct, most in accordance with our generally accepted accounting principles. And those then are the ones we're going to use to create the financial statements. To do that, we're going to go to the Financial Statement tab, just pulling these numbers over to the Financial Statement tab. That's what we have here. Now, remember when we go from the adjusting the trial balance to the balance sheet, it has to work. It's just like a puzzle. So you can think of it just like a game here. We're just reformatting something into one format to another that are pretty much the same. They're congruent. If it fits in one format, it must fit in the other format. So here we have the plus and minus format, or the debit and credit format, I should say. And we know this is in balance. The double entry accounting system is working because the debits minus the credits, or the debits equal the credits, indicated by this green 0. As long as this is a green 0, as long as the debits equal the credits, then it must work, just like a jigsaw puzzle being out of the box has to work to make the picture on the box. You just know it's got to work. So then we're going to put that into a plus and minus format. Why? Because people don't understand this. We can get everything we want from it. I know what assets are. They're 119,100. I know that the liabilities are the 53,500, and I know that total equity is 105,600. So the debits and credits are actually more useful, but we don't want to explain them to other people because most people don't understand them, and that would take longer than just putting it into a more bulky plus and minus format, as we will do here. And we've already done that with the accounting equation from a very simplified format. We're just breaking out the accounting equation into more detail, more sub-accounts. So the accounting equation is just these accounts, assets, these accounts, liabilities, and these accounts, everything else, equity. So we know it already works because the accounting equation is in balance, and we know that the balance sheet is just the accounting equation, meaning total assets equal total liabilities plus equity. So it has to work. So I just want to reiterate that multiple times because that gives us motivation to keep on figuring out the puzzle. If we lose confidence that the jigsaw puzzle fits together, then we may give up on the jigsaw puzzle. Okay, so here we're going to go. All we're going to do is find a home for all of these accounts here. Once we do, we will be in balance. Note that a lot of books will say that we have to start with the income statement first and then do the equity statement and then the balance sheet. And if we were doing everything like with a calculator or something like that, I think that would be the case. But I'm going to make the argument that I would rather start on the balance sheet. And that's because the argument to do it the other way is that we need the income statement in order to figure out the partner equity section. And really the partner equity section is the smallest part of the balance sheet is everything. It's assets, liabilities, and equity. So I would rather start from top to bottom, and it's not hard to figure out at least what the equity section is in total, meaning if you have a properly formatted trial balance in Excel, then you can just highlight all these accounts, and it says the total equity is 105,600. It's right there. It's our accounting equation. Now, breaking that out between the partners is a little bit more difficult, but to me, it's better to be in balance first and then break that out, because that gives us the big picture. That gives us the most assurance right off the bat. It's also easiest to start on our accounting equation, assets equal liabilities, equity. It's easier to start on our trial balance going from top to bottom. So those are my arguments for doing it. This way. Do with them what you will, but that's how we'll go through in this one. So we're going to start with the assets here and go through this. Now the assets are going to be broken out into two categories typically, called current assets and then property, plant, and equipment. So we're going to start with current assets. Current assets are going to be assets that are more liquid, closer to cash. So obviously cash is a current asset. That's a very liquid asset. Accounts, all we're going to do is just go from top to bottom and see these green accounts, which section should they go into here. Accounts receivable is current because we expect it to be converted to cash very soon. Supplies we also consider current because we expect to use them soon in order to help generate revenue. And then prepaid rent, it has a 0 in it. It would be current, but we're probably just going to eliminate it because it's got a 0 in it. So we don't need to deal with prepaid rent. And then prepaid insurance, we typically see that as current. We're going to use it in the next year here. And then equipment, not current, right? Equipment's going to be, that's like 5-year property. So we're going to be using that for like 5 years. So that, and of course it's property, plant, and equipment. And so is depreciation. So these items we need to put under current assets. A couple ways we can do that. We can just right click, copy, and paste it here. I like to use a formula to do that, just to show it step by step. So it's an easy formula. We just say equals and point to that cash and enter. And there we have it. Notice it's indented here. So just be aware of the format of financial statements, because as they get longer, if we know the format, it's a lot easier to deal with. Meaning we have assets, and then under assets, we have current assets, colon. That means that we're gonna have a subcategory of current assets. Then we're gonna indent the current assets here, and we're gonna put those indented current assets into the inner column. Not because they're debits or credits, but because we're just gonna subcategorize them out. Remember, the main goal here is to remove debits and credits and not confuse our reader with debits and credits, although we need debits and credits to build the financial statements because it's much more efficient to do so. So then we're going to do the same thing for the next one, equals the accounts receivable, enter. We'll do the same for the next one, equals supplies, enter. Same thing here, we're just going to say equals we don't need prepaid rent. I'm not going to do that one. And then prepaid insurance, and enter. And that's it, because the next one is equipment. Now you may have thought it's easier to do that with a formula. We can still use autofill. So I'm going to show that real quick. I'm going to delete these and just do it again by clicking on cash, which is going from there, and then just autofilling. Auto drives it down. Dr. Phil does the calculation. There we have it. Now we have a problem that it picks up prepaid rent, and we don't want that because that's the next one in line. So that one I'm just going to delete and put that in manually. And if there are any other accounts below that, then we can go with the same system of copying it down. So we want to get used to just how the relationships work. Okay, so we're going to do the same thing for the numbers now. I'm just going to pull over the numbers straight over. Note in practice, if we had multiple cash accounts, multiple checking accounts, or something like that, we would want to group cash those accounts together here. So we may have more accounts in practice that are all cash accounts, and we don't want to have 3 checking accounts on our balance sheet. We would just be combining them. But here we'll just put all the accounts here. So that just is a matter of how much detail we want on our balance sheet and how much detail we want on our trial balance. So here we go. We're going to say this equals the 36.1. Notice we're in the inner column, not because it's a debit, but because we're going to add them up and subcategorize them. No debits and credits here. Equals the 8,000. Supplies equals the 5,000. And then the prepaid insurance down here equals the 11,000. Now again, we could use the autofill again. So just to see that, if we delete this and we had the first one, we could just autofill it down. Autofill auto drives it. Dr. Phil does the calculations. Of course, we have a problem here again because there's a skipped cell. So to fix that, we're just going to say equals and point to this 11,000. Okay, and there we have it. Now we're going to have the total to the outside, and that's going to be total current assets. You can just type that in there. I'm going to underline this one too by going to the Home tab, Fonts, and Underline. And then we're just going to sum this up. It's just the 36,100 plus the 8,000 plus the 5,000 plus the 11,000, 60,100. We're going to sum that to the right side. So notice what we did. Assets, subcategory of assets indicated by current assets, colon, then indicated by the indentation and indicated by it's on the inner column, which we will now put the total of in the outer column. We'll use the sum function to do so. So we're just going to say equals SUM, double click the sum function, highlight the 36,100 down to the 11,000 and enter. So there we have it. Now we can double check this by just highlighting these items and say that adds up to 60,100. It matches here, looks pretty good. I'm going to say we found a home for those. To indicate that, I'm just going to highlight these, right click, and make a little yellow box there. That's going to indicate to me, to us, hopefully, that we have found a home for those accounts. Now we're going to do the property, plant, and equipment, which is going to be just the equipment and accumulated depreciation. So to do that, we'll do the same thing, property, plant, and equipment, colon, to indicate that it's going to be a subcategory, equals, and just point to the equipment, enter, and then equals, and we'll point to the accumulated depreciation. Now I'm going to change this a little bit because the accumulated depreciation is not as, well, let's keep this for now. We'll change it. I'm going to do a common error we have, and then we'll make an adjustment to it. Okay, so then we're going to put our information in the middle column, and then we'll subcategorize it out just like we did up top. So the numbers in H12 is going to equal the 60,000, and then the number in H13 is this 1,000. Now there's a couple ways we can deal with this 1,000. It's a credit here, and we don't want the credits over here. So we could, if it's a subtraction problem, we could put negative numbers, but I tend to like to do that with words. And note, when there's subtraction problems, the financial statements aren't always consistent, and I'll show you that in a second. But in any case, I want to flip the sign just to get used to removing this credit. I don't want a credit because these are indicating credits. We want to get rid of credits here. There are no credits. It's plus and minus over here. So to do that, instead of saying equals, we're going to say negative and then point to that number. It'll take that number and flip the sign. So there we have it. And then we're going to have the total property, plant, and equipment. So total property, plant, and equipment goes here. You can type that in. I'll spare you my typing. And then that's going to go over here. Now don't worry if it's a little long for the cell. We can make the cell a little bit longer if we really want to. But it would override it anyways. Now I'm going to make a common error here. This is where the common error is going to be, and then I'm going to fix it just to show this common error. So we're going to use the sum function and add up the property, plant, and equipment. See if you can spot the error. We're going to say equals SUM, double click the sum, highlight these two items, and enter. So there we have that. And now we're left with these subcategories in the outer column. I'm going to add these up to get the total assets. So total assets equals all these, and then all these, which we did here, which is represented by this subcategory, and here, represented by this subcategory. So the total assets are just going to be these two. Note what we're not going to do. We're not, and we haven't done this yet, and we're not going to do it pretty much any time in a financial statement, is jump from column to column. There's a number above this column, so I'm just going to stay in this column. It's not like I'm going to go, what's the formula here? It's going to be this, and then jumping back over here, and then jumping back. We're not going to be zigzagging through columns. Notice here, these numbers all came from this column. These numbers all came from this column. We didn't jump back and forth. Here, there's a number above it. That's the first number, and therefore we're going to stay in this column. I'm going to use the sum function to do this, even though there's only two numbers, and there's a lot of blank cells. That's okay. So I'm just going to say equals SUM, double click the sum function, and highlight the 60,100 to the 61,000 and enter. Now if we double check this, if we've properly formatted our trial balance over here, I can highlight the entire thing and say, okay, yeah, it should be 119,100. Wait, I have 121,100. Okay, what's the difference between the two? So we automatically say, what's the difference here? 121,100 minus 119,100, 2,000. Now, typically, it's an issue where we went the wrong way, meaning we added when we should have subtracted, debits and credits, we went the wrong way with it. So maybe if I divide that by 2, it'll give us a better indication, because if I went the wrong way, we would be off by twice whatever the error is. So that's a common way to find your problem, our problem. And so it should be 1,000 here. So there's the 1,000, and so that looks like it's this number. And of course, that's the number because that's a contra asset account. So all these other assets are positive numbers, increasing total assets. This is a negative number here, or a credit, because it's decreasing total assets. So accumulated depreciation needs to be subtracted. Now again, we don't really want to put a negative number here. Typically we could, some financial statements will, but a lot will just indicate it with words. So what I'm going to do is I'm going to delete this and say less accumulated. I'm going to abbreviate that, depreciation. So less accumulated depreciation. Now again, you could see this in multiple different ways. They could not put anything and just put the difference over here and just subcategorize those, especially if there's multiple categories of property, plant, and equipment. Sometimes financial statements just expect you to know that. Just like down here on the income statement, we're going to have revenue minus expenses, and it's not like they say less expenses even, or put a subtraction sign for all the expenses. We're supposed to just know that. So financial statements are not always totally consistent with the reporting of a plus and minus. Some things they just assume. Different types of things will report a bit differently. We could put a negative or not, but here we're going to put the indication in the word less. So there we have it, and now we can see that it ties out to what we think it should. Well, no, it doesn't. Now we're going to do, this should be a subtraction problem. So here we're going to say this equals this 60,000 minus the 1,000. 60,000 minus the 1,000. Can't sum it, subtract it. So there's the 59. Now this should be right. So I can check this two ways. I can highlight these two, 59,000, 59,000, or all of it, 119, 100, 119, 100. Now I'm going to go ahead and underline this number, Home tab, font, underline this number, Home tab, font, underline, and that's the first component. Now we're going to work on the next side, liabilities and the liabilities and equity for the partnership. For more accounting information and accounting courses, visit our website at accountinginstruction.info.